Thank you, Andrew, for the introductions. Very good afternoon, everyone. It's very great to see so many of you here until the last session. Congratulations, we're almost at the end. So, as introduced, I'm Ricky Kim, partner at Watson Farley, based in Seoul. I'm very delighted to be here in front of you, back in Busan at the Paradise Hotel, back on stage. And to me, I've got a very small panel, but then, it's deep wealth of experience between the three. They've already been introduced, so I won't go through it again, but I think giving some background information, I think Solomon Tan, to my left, he has held many management positions in the maritime industry, whereas Woon has almost 2 decades worth of experience at international banks and now at a consultancy firm. And Mr. Lee Joo-ha, who has headed up the finance team in a Korean ship owner, but now with KDB Kiamco. So the panel today is actually very close to what we had earlier with the banks panel. So thank you, Ben. You've asked all the right questions, and basically I can throw the same questions to these guys. So I hope that the basic themes that we'll talk about today is capital allocation decisions, interest rates, market outlook, diversification and risk management, market volatility and geopolitical risk, and financing trends. So I'll just throw the first question out to Solomon. Basically, it's a question that was asked in the banks panel. How do you balance short-term financial performance with long-term strategic goals in a high interest rate environment?
Thank you, Ricky. Hi, everybody, and it's a pleasure to be here. Solomon, I'm from Energos Infrastructure, and I think just a very quick, brief intro before I delve into the question, being asked by Ricky. I think I come from a very maritime background. Early part of the career, spending a lot of time in restructuring maritime assets. So looking at the 10 years before time, and then after that, joining a tanker platform, growing the business, and then eventually in management. So looking at the tough 10 years before COVID, and then throughout the whole COVID period, moving on into ESG, and then being part of energy transition, now at Energos Infrastructure. We are a company headquartered in the States. I sit in the Singapore office. We have 9 FSRUs, 2 FSUs, and 2 carriers. So all in all, I think very varied background. Maybe, have some answers to some of the questions that Ricky will be asking, but this is just my professional opinion. So I think, interesting panel topic, how to manage a shipping business, when times are good. I think in general, you can do a lot of things when business is great. Rates are good. So instead, a lot of my views will be how not to run a shipping business when times are not good, right? And I think a large part of my career, we saw, owners in the past investing heavily in expansion plans at the wrong time, thereby locking in, rates, break-even rates that in the past 10 years, even at the bareboat levels, was not able to break even on. So fast forward to today, when times are great, ship owners are earning super normal profits. I think there are multiple options, right? Obviously pay down debt, reduce the interest cash costs to the company, return value to shareholders. But I think at the same time, also balancing some of the decarbonization concerns, fleets getting older at the same time. And then rather than deal with a reducing market share concern, ship owners have to replenish the fleet. And I think the question, and something that I spent, the last 7 years looking very heavily into, at the start of that 7 years, was the scrubber situation. Like, what do you invest in? Who do you go with? And then I think the shipping community at large in general just decided to wait and see. But I think fast forward to today, we reach a point where you can't wait and see anymore. So you've got to make a decision. And I think investments have been made in the space. So short-term financial performance is great, but it's short-term, right? On a long-term basis, we need to continue to be sustainable. We need to continue to hang around, right? Sustainability also means that the company needs to hang around long enough. So I think right now, what we have seen, or at least what the market is showing us, is that number one, because the yards are full, not that you can get a space anytime in the next 2 to 3 years anyway. Of course, the rates are, kind of pretty high. So if you lock in at those rates today, you might not be able to make a profit on them if the rates go down 10 to 15%. So we kind of need to wait and see.
Thank you. Thank you. First of all, it's my honor to be on panel of this last session, and I'm so glad to be here. I was in a shipping company for more than 15 years, and now I'm working in this asset management company for more than 3 years. So, based on my experience, I think given the characteristics of the ship financing, it is basic and essential to have a long-term financing. But with the trend of declining of the interest rate, we may consider to have a short-term financing like less than 5 years, maybe. But I think basically if we have a long-term charter, then basically we have to secure a long-term financing. And anyway, the balance of the long-term charter and long-term financing with short-term financing should be required, and that could help the shipping companies to reduce their interest cost anyway. Yeah, thank you.
Keeping on the point of interest rates, Solomon, back to you again. With interest rates coming down and inflation likely to ease off, do you think this has affected your strategic priorities at all? As an owner and operator, maybe something for you as a perspective of a non-Korean owner.
Yeah, I think one of the earlier panels actually touched on that. I think that's the one moderated by Ben. I don't think when the interest rates is expected to come down, that's one. Number two, doesn't really mean that we rush back into borrowing to expand right away. I think right now, at least from an owner standpoint, it's really about at the current moment, debt levels are low anyway, right? Most of the ship owners, the publicly listed ones at least, debt levels have come down more than 50-60% over the last 24 months. So would they rush to load back up with more debt, with the interest rates coming down? I don't think just yet. I think the question to answer now is, how to expand and how far do we go? So looking at the aging fleet, I think we probably, and of course with, CII considerations, we have 2 to 3 years before we need to pull the trigger. And yeah, I don't think coming down a few basis points right now is going to really push owners to really borrow very quickly.
Yeah, I think the earlier panels we spoke about fleet renewals and buying second-hand vessels. So perhaps Woon, can you comment what you see in the market?
Thanks, Ricky. First of all, as always, I'm grateful to Marine Money, both Kevin and Andrew, for always inviting me back to Busan. It's always good to come back to Busan. 감사합니다. My thoughts when I first saw the discussion title was, what a way to end off MM Busan, where with all looks good. Perhaps it truly reflects the state of the market currently. And secondly, my second thought, am I even qualified to comment on how to manage a shipping company? Nevertheless, I will try to share my knowledge. My name is Woon. I come from Singapore. I spent about the past 20 years of my career largely as a ship finance banker, and now I represent MSI, which is an independent maritime consulting firm. We specialize in almost all sectors of shipping, and we have been established since 1985. What we do is essentially we provide market research, valuations, forecasting of the markets, as well as consulting services. Ricky, I believe the question is whether the owner should invest in a new building or second vessel, right? Okay. What I do at MSI, we talk a lot to a lot of banks, a lot of ship owners, even ship brokers as well. This question is very relevant, and in most conversations these days, what the banks will express concern about is whether it's safe to finance vessels now given the elevated prices, and owners will also question if it's the correct time to place orders for new buildings or even to buy a second vessel. Very tough question to answer against today's backdrop, and I believe it's almost difficult to find a correct or rather perfect answer. So when we evaluate the potential investment, one has to first consider several factors such as what sector are we looking at, what are the supply and demand numbers looking like for this sector currently and in the next few years, what is the owner's strategy to deploy these vessels, and do you really need the vessels, or can you afford to wait for a few more years for the vessels to be delivered? Of course, it would be much easier if the asset prices were lower. However, currently, as mentioned earlier, the prices are really high. A very simple answer to this question would be, buy only if you need a vessel to fulfill a profitable charter contract, or if you really need to replace your aging fleet.
Thanks, Woon. So, I mean, throughout the conference, we've spoken about how the current market is very strong. But obviously, you know, we've also mentioned all these geopolitical uncertainty, supply chain disruptions, you know, crises, keyword black swan. So, how would you build resilience in your operations to deal with short-term, you know, black swan events or longer-term structural changes, Solomon?
Wow, that's a tough question. For the black swans, I think COVID was the blackest of all. And in line with COVID, there were a number of things that happened. Personally, I saw something that happened, I mean, the Ukraine war, I saw two aspects of that. I mean, one, you know, Ukraine's a top exporter of sunflower oil. So for the tanker community, that's where a lot of the vessels would head to get the cargoes. So I saw the side of it where people got stuck, not knowing what to do. Can't berth, can't do anything, and you're fully loaded. And then on the other side, in my current role at Energos Infrastructure, in line with the same war, Europe had to transition to getting their own FSRUs, right, and not rely on Russia gas. And again, there was a mad rush to, you know, get an FSRU for each of, for the countries to be self-reliant. I think having lived through all that, in hindsight, it's easy to say, okay, this is what we do, this is how we look ahead, these are some key metrics, but I think sometimes it just catches you by surprise. So I think instead of thinking of how to look ahead, I think building an internal response to any situation like that so that you're nimble, you can capitalize on the situation no matter how it swings, respond quickly. I think at the end of the day, in a black swan event, everyone is affected, right? So more importantly, having good relationships with your bankers, having good relationships with your customers, open channels. In my experience, that has definitely helped a lot in managing the black swan downsides. I can't really say more than that, to be honest.
Thanks. Woon, any comment from a consulting point?
There has been a series of geopolitical disruptions, or rather for today's context, we should name it black swan events. And to be honest, most have provided a boost to vessel earnings. As an owner, the correct way to probably word it would be how to prepare for a situation when all these disruptions are resolved. I wish to borrow probably two takeaways from two speakers earlier this morning. Mr. Choi from Kexim mentioned we cannot predict the fluctuations of the market, but we can strategically realign our resources to meet the challenges ahead. That's point one. And my colleague, Dr. Edmund Ken, he has shown a chart illustrating the potential decrease of charter rates if the canals resume peaceful operations. And with this knowledge in hand, right, owners will be able to potentially map out their own internal cash flow to to cater for these disruptions.
Chua, I guess from a Korean perspective, how would you advise your clients to prepare for market volatility?
You know, these days the changing of interest rate is very rapid and sharply. So I think I think the most important is the portfolio of the fleets. I think so. If I am frankly, I was in a shipping company which was focusing on a long-term charter. I still love to have a long-term charter when I do financing for. In this regard, I think the sustainable cash flow is very important, I think. And this includes long-term charter, of course, and operational expense should be controlled. And I think the diversification of the fleet is also important.
Yeah, thank you. So I guess, yeah, like you said, I think it's very common to see long-term charters as an important part of financing and Korean ship finance. So we'll keep you on the theme of financing. First, Woon, how do you see the role of alternative financing evolving in the shipping industry?
Again, I'm not a ship owner, but I'm sharing my experience as a ship finance banker in the past. Maybe we start off with a bit of history in the ship finance market. From the early 2000s to all the way up to 2008, we have the European banks, the Western banks have dominated the ship finance market. Post 2008, I think the situation has changed dramatically. We see the inclusion of ECA financing, Chinese leasing house coming in, private equity coming in as well. And even till today, Chinese leasing companies are continuing to try to strengthen their position in ship finance and ship leasing. Even excluding the Chinese leasing companies, we see the Japanese leasing house, Japanese banks gaining foothold. And more recently, the Taiwanese leasing house and Taiwanese banks are also coming in. What this means for the owner is probably a good thing because they have a variety of choices, different sources of funds to tap on funding. But again, the owners cannot be complacent because the banks are not aggressive to chase for projects that are not viable. They are still looking for good quality credit. And as what I always believe, if a project has good credit, is always able to attract financing. And if a project is not able to attract financing, probably in the first place, it's not the correct transaction to work on.
So we'll move on to another topic. ESG obviously was mentioned as always. So Solomon, how do you incorporate ESG goals into your long-term investment decisions?
Well, Energos infrastructure, is at the forefront of that. One, we're helping governments, countries, markets transition from, your traditional fuel to transitional fuel, which is your LNG. How do we incorporate that into our investment goals? This platform, we are owned by Apollo Global Management. It's set up for the primary reason to drive that objective. So I think, we've been very active in the region. If you think about it, Europe's sort of figured out their FSRU requirements, so I think they're at the forefront already. Asia is where the opportunities are. So we've been active bidding in the region. We just signed an MOU with a Korean yard for EPC contract. So now we're just looking at the next opportunity. Once we secure something, I think that's where we are actively investing and deploying our resources.
How about innovations or technological advancements are you implementing to maintain operational efficiency in a volatile market? Any of you want to comment?
I haven't prepared some answers for the ESG issues.
Oh, yeah, please go ahead. Yeah, please cover ESG.
Please. I don't know, but I would like to offer a slightly different point of view, especially in Korea. Environmental issues is very important, especially to the shipping companies, because the shipping industry is very sensitive to the environmental issues, you know. So, but social and governance issues are less focused on comparing to the environmental issues these days. Regarding the financing, you know, we are all looking for the environmentally better new buildings, or the environmentally the technical measures to reduce the environmental issues, you know, but there's no interest on the social responsibility or the ethical governance, something like that. So I think we have to take our attention to the social responsibility and the ethical governance to comparing to the environmental issues too.
Thanks. Woon?
Maybe I can also add on to this ESG and innovation kind of question. Very good questions, and key consideration is perhaps the word long-term. We are all trying to go for long-term net zero shipping towards 2050. And in fact, the maritime community has been debating, discussing, exploring the path to green shipping for the past few years. But I still believe we are still at very early stages. There is a lot of learning to be done, and there remains quite a fair bit of uncertainty as well, from type of fuel to use, type of ship to order, viability of new technologies, understanding the current regulations and how this will evolve, and as well as the introduction of more and more schemes to incentivize or penalize emissions. I always believe the key here is to get good information about this area, make it to the plan, and gradually put it into action. For us as a consultant and provider of market intelligence to the maritime industry, we have also added in decarbonization data like AEI, AER, CII to our suite of products. And in these respects, a lot of our clients have begun to engage us on topics such as assessing ROI of installing ESDs on the fleet, conducting market research on things like LNG bunkering, as well as analyzing emissions level of a ship finance portfolio, advising how to steer the portfolio and new business to be in line with Poseidon principles, just to name a few examples. So post forum, please feel free to approach me if you have any questions on this as well. Thank you.
So I think we're doing very good on time. But obviously, I think a lot of points are very repetitive today. But I just wanted to ask a final question to my panel. Basically, it's a very general question. What is your approach to managing market volatility and preparing for downturns? And in a way, I guess, what is your strategy for navigating the market in the next 12 months, given the factors that we've discussed?
I will answer this question from a very big picture perspective. I know that perhaps there are quite a number of students in the audience today, so I will start with two scenarios, involving fresh graduates. First scenario, you have a fresh graduate coming out to the maritime industry, securing a job in a shipping company, let's say during the year 2005, where the market is bullish. For 3 years, he experienced very high charter rates. Owners are always buying vessel. Financing is very secure. Okay, this is scenario one. And scenario two, you have a fresh grad that came in probably towards, let's say, beginning of 2009, where the market is very depressed. So for 3 years, all he does is really to maintain cut costs, making sure that operational efficiency are at its peak, and hoping that the company can survive so they can get his salary and bonus. Okay, fast forward 20 years later, these two guys, very experienced, provided they are still in shipping, will probably realize one simple point of shipping. You know, we are very cyclic industry. We work in cycles. What goes up will come down. What goes down will come up. Okay. The main difference is probably during the good times, owners have less pressure to attract more profits, and they can devote more resources, more time to focus on items like fleet planning, new technologies, staff training, and even keeping shareholders happy. And in a down period, the priority will be ensure survival and to keep operating efficiently and robustly so that they're ready to ride up the next cycle.
Thank you. Any final comments?
I think it's very well said by Woon. I think from an owner perspective, in a down market, sort of, let's call it 2015 to 2020 period, navigating that point in time was you will undertake cost reduction or optimization initiatives if it suited the P&L. So, okay, next 12 months, I mean, rates are great. Certain aspects of the shipping market are reverting back to the norm again. I think because of the decarbonization focus right now, I think the owners community has figured out some of these initiatives are actually bottom line friendly, right? And have already invested in some of them, particularly when it comes to fuel savings, fuel efficiencies. So continue to do that, I think will be the approach. And then as to what not to do in a volatile time, I think, you make long-term decisions in general when you can see far enough, right? So if you can't, then at the very least, make decisions that protect the existing fleet, your existing fleet. So status quo, not necessarily allowing it to shrink. So keep the tonnage the same, but do not grow aggressively. Or if there's some kind of internal rate, you want to increase your tonnage per year by 5 to 10%, just keep to that.
To prepare for the last questions, I imagine that I became CEO of a shipping company. Which was very fantastic imagination. If to prepare for the downturns and to enjoy this good market, I think if I'm controlling the company, then I will focus on managing debt to equity ratio. Debt to equity ratio is very key point to control or to make the healthy status of the financials. I mean, these days, especially in Korea, the debt to equity ratio of the Korean shipping companies is like average is 370%, which is almost 100% higher than other industries. But these days in 2022, the average debt to equity ratio of the Korean shipping companies reduced to 60%. It's a remarkable reducing comparing to 2015. But this is almost 200% less than the other industries' debt to equity ratio. So I think in this time, to prepare for the downturns, we have to keep our financial status healthy, and that the point is to keep the debt ratio is stable as far as we can. Thank you.
Okay, thank you. Thank you, my panelists. It's been very insightful. And thank you, of course, Marimini, as always. Thank you.